U.S. and Chinese negotiators have already concluded trade talks for the day. Treasury Secretary Steven Mnuchin saying that they were, quote, constructive discussions between both parties. And stocks are rebounding on those comments. We are well off the lows of the day. The Dow was off over 300 points not too long ago, and now just shy of reaching into positive territory, off around 36 points. S&P and NASDAQ still firmly in the red. We have Rick Newman here joining me on set. We are also joined by Brett Ewing, Chief Market Strategist at First Franklin. And Rick, I'm going to start with you. Just your reaction to what's been going on over the last 24 hours. So the talks lasted for just about 4 hours last night, only a couple of hours this morning. What do you think this means in terms of getting a future trade deal?
Discordance out of Washington. I mean, clearly they did not make a deal. I mean, it's obvious. Trump imposed the tariffs he threatened to impose. So he's kind of been itching to do that. He did that. And we've been hearing from the White House repeatedly that these talks have been productive. I guess we have to redefine productive. So productive means you don't agree, and you're going to punish each other, and everybody's going to lose. But that's the new meaning of productive coming out of Washington. So I think the one thing, there's some relief in the markets, partly because maybe this is a sign they're still continuing to talk. But the tariffs don't actually hit on the ground for a couple of weeks. So this is a wrinkle that I think we did not expect earlier in the week. And the wrinkle is the tariffs only apply, products that are on their way from China are exempt. Mm-hmm. So if they're in transition, if they're on ships at sea, they're exempt from the tariffs. And the tariffs only apply to products that were shipped beginning on May 10th, which is today. So that actually means, that effectively means there's kind of a 2 or 3 week grace period here.
Time.
That's right. It buys us time. So the threat to impose these tariffs wasn't quite as serious. I mean, there's kind of a loophole in the tariffs right now.
That's interesting. Brett, when you just take a look at the market reaction, we had the Dow off over 300 points earlier today. Now we're only down by just around 30 points or so. I mean, how important is it to the markets that we get a trade deal soon? Because the only real headline coming out today was that the talks were constructive.
Indeed. I do believe that it is important to the markets that we get a trade deal. I think the markets are looking like that the negotiations are ongoing. To me, one of the big signals I was looking at this week was the fact that the trade delegation, after the tweet on Sunday came out, that they were still showing willingness to come over here and actually sit down and have some talks. It shows the need that China really, really needs to get a deal done. I believe their economy is a house of cards, and I don't believe they can run a marathon against the United States.
Rick, do you think that Trump will continue to follow through with his protectionist agenda that we have been seeing him do over the last, several months, I guess I should say, no matter the blowback? Because, I mean, markets, they do care a little bit. We did see a pretty volatile week this week in the broader market.
No, I don't think he can. I think there are limits to how far he can go. And I essentially think he's testing those limits right now. We know that Trump pays close attention to the stock market. He considers that a report card on his presidency. And I think we're in his discomfort zone right now with markets reacting negatively. I mean, markets are down almost 3% for the week, the S&P 500. So that is clearly a negative reaction to the tariffs. But as Brett was just saying, markets still seem to think there is going to be a deal within the next few weeks. And if it really becomes clear that this is a standoff situation, the higher tariffs are now here to stay, I think we're going to see a more severe reaction in the markets we saw this week. And then that gets to there's still another level of tariff Trump has threatened, and I don't think he will do it. I think that he's not willing to basically take the blame for sending stocks into what could look like a correction or even a bear market.
Brett, how big of an impact do you think that this could have on U.S. economic growth if we don't have Brett right now? We're going to work on getting him back. So, Rick, I'm going to throw this one to you. I mean, just in terms of the depth of how big of an impact this could have, we had one economist on here yesterday saying that it would only be about a percentage point or a tenth of a percentage point or so with the 250 billion that was put on. But if we see additional, that could be pretty substantial.
Well, here are the numbers the way I've been thinking of them. So at a 10% tariff, which is what we've had, so a 10% tariff on $200 billion worth of imports is a $20 billion tax increase per year. Raise that from 10% to 25%, you go from a $20 billion tax hike to a $50 billion tax hike. And then if you hit those other $300 billion worth of Chinese imports, that's about another, $75 billion tax on there, if I'm getting the math right. So it's when you get beyond 50 billion, I think it starts to add up. As a percentage of the overall U.S. economy, it's very small. But you do get into confidence issues with CEOs. I mean, this is messing up supply chains for a lot of companies. A lot of companies are now starting to think, do I need to actually move my sourcing to someplace other than China? I mean, they can do that. But, you know, we don't have a rip-roaring economy. We have a pretty good economy right now. And even if you're chipping just a couple tenths of a percentage point off GDP, why? Why would you do that when you don't have to?
Well, yeah, and especially with a president, like you were saying, that tracks the market and the economy so closely and based a lot of his success off of that. Rick, I mean, do you think that there was one guest also on the show yesterday basically saying that President Trump should just call Xi Jinping? They should just have a phone call. That's the only way this will get worked out. Do you think that that is at all likely here in the foreseeable future?
Well, first of all, I think it's possible that has happened and we don't know about it. But I think both sides are fundamentally at odds here. And I think we did learn some new information this week. And I think this is important. I think we learned that President Trump is not going to accept a cosmetic trade deal that doesn't change much, but just gives him something he can wave in the air and say, see, I did it. He actually wants a substantive, he wants substantive reform in the way China manages its economy. And it's a little tough to see how this actually gets resolved. So I'm more pessimistic than I was a week ago.
Interesting. And then also that begs the question that if Trump is successful, I know you're pessimistic right now, but if he is successful and gets a substantial trade deal, then could we see other countries follow through and take a harder stance with China? Obviously not in the same position as the U.S.
I don't think any country wants to do what Trump is doing. There are better ways to do this. It is worth pointing out that you know the right way to do this is to get together with all your allies and confront China together. I mean, Europe would be more effective at doing that as the EU, which is a bigger economy than the United States, or getting together with Japan. I mean, that's what the Trans-Pacific Partnership was supposed to do, the TPP, which Trump withdrew from. We know that he just wants to go it alone, and you're weaker alone than you are with allies. So I don't see any other country pursuing this line of negotiation.
All right, Rick Newman, thanks so much for joining us today.